Welcome to This Week in Money. I'm Jim Goddard. Today, Mr. Jim Dines, editor of DinesLetter.com, one of the most accurate predictors of market trends and future investment ideas. How soon will you have a 3D printer? And John Williams, editor of ShadowStats.com. He tells us what he believes are the real numbers when it comes to inflation, unemployment, and your ability to cope with that reality. We'll talk to Mr. Dines right after this.
The best of the best. Randy Elvis Frisky and his Las Vegas show band with Cassandra Frisky. September 14th at the Sagebrush Theater. Tickets at Kamloops Live box office. Call 374-LIVE. Details at RandyElvisFrisky.com. Welcome to This Week in Money, the source for market opinions. Sitting in for Phil Mackesy, here is Jim Goddard.
My guest is Mr. Dines, editor of the DinesLetter.com. Critics call it the most accurate newsletter on the markets. First of all, I'd have to ask Mr. Dines, why are you so accurate? What makes you click where other people don't?
Maybe I'm just a lucky guesser.
Wow. Well, if everybody could guess like you, we'd all be billionaires.
Oh, thank you.
Where are the markets going to go? I know traditionally in the fall, that's when we see the major corrections every time a market has a major fall or a disaster. It's in September or October. Are we going to hit one of those walls again?
Well, the last time we had an interview, I was optimistic on the markets, and I still am. I think we're going to go higher. I'll get to the market in a second. What I really want to talk about is a tremendous new opportunity that's just come up. And I think this is a good way to make money. And have you received the last issue?
Yes, I did.
Oh, okay, good. At the Dines Letter, we call it TDL. We believe in major moves, not snatching small profits here and there. And we call them super major bull markets. And we're well known not only as the original gold bug, but also silver, the internet boom, uraniums, the rare earths, China, all of them. But our latest issue is going to unveil what we believe is the biggest profit opportunity ahead, and it's going to be the reinventing of entire industries. For example, Jeff Bezos, Amazon, he's been wiping out bookstores. Elon Musk, Tesla Motors, shaking up the auto industry, and he's even reinventing the American government's rocket industry. Yelp is replacing Yellow Pages. LinkedIn is restructuring the entire employment process. But I asked myself, which area is next? I pondered hard and long on it, and I came up with manufacturing. Which area of it? All of it. And there's an emerging field called three-dimensional printing, and I'm predicting here in front of a recorder that you'll be hearing a lot more about it. You can keep a 3D printer on your desk if you need a scissors, for example. You just download the software for your choice, and it will even give you the different colors, and it will build it for you layer by layer, accurate down to the atomic level. And so this will cut back on a lot of shopping in the retail industry because you can stay home and build things. And I think this is going to be nothing less than another industrial revolution. The 3D printers already they make hearing aids and dental implants and prosthetics. They're even arranging human cells to print human body parts, organs, jawbone, skin. And this is right out of Huxley's Brave New World. And in a harsh environment, the wilderness or in a spaceship, why carry duplicate inventory? You just need, if you need a screwdriver, just print one. And this is here today. Boeing is already creating airplane parts on demand. They've made a working guitar, and they've even, believe it or not, they've printed a gun that shot bullets. So this Dines letter goes into more detail, but future growth is clearly breathtaking, and it gives investors an opportunity to make serious money in a super major bull market. Just as I did as the original gold bug at $35 an ounce, I'm now the original 3D printing bug. Can I go a little further into that?
Oh, yeah, absolutely. We have lots of time, Mr. Dines.
In which 3D stocks to invest? It's so early. in the move that there are very few, and they're already beginning to edge higher, as charts in this Dines letter will show. So, but unfortunately, that's as far as I can take you with that, and I can't name them because out of respect for my paying subscribers. But there are 4 great stocks we've discovered. But I will share with you a book on 3D printing that was just published. It's not available through the Dines letter. It's called Fabricated: The Promise and Peril of a Machine That Can Make Almost Anything. It's from John Wiley and Sons. And it shows photographs of actual 3D products, a perfectly fitting shoe, a heart valve, and best of all, there's no assembly required, no special skills.
Well, it sounds like this could be the death of the dollar store. I mean, all these plastic products you can get there.
It's going to be a massive upheaval. And I'm prepared to predict here on tape that 3D technology will be looked back on as the blank canvas of the 21st century. And they put layer after layer, 50 microns thick. That's 1/20th of a millimeter. And the printer sells on Amazon. It's only $1,300 today. And the price is going to come down a great deal. But that's not all. And some of my long-standing predictions, such as the coming new social order, is already here, and it's featuring the end of the age of jobs, believe the unbelievable or not, and that's why unemployment is so high, is so intractable at 40% in many countries, and the government can't create jobs in the age where there won't be enough for everybody anymore, especially with the end of, or with the serious diminution of the manufacturing industry. So I envision restructuring everywhere, and it's all part of the same phenomenon, with social networks revolutionizing dating, for example, and business networks reinventing looking for a restaurant in a new city. Just tap into Yelp and see what the locals pick for the best one, whichever type you seek. Zillow is restructuring real estate shopping, and the stock's already gone from around 20 to over 100. I mean, this is a wake-up call, and it's a once-in-a-lifetime opportunity, in my opinion. And education will be next. We're still researching as to which stock we want to pick for this, but basically the industry will take a great teacher at a top university, put him online with a classroom of hundreds of thousands of pupils, paying maybe $4 a lesson, and which is happening. There's one guy in Korea right now who's earning a breathtaking $4 million a year, and I'm not saying it's good or bad. I just work here, but many teachers are going to be unemployed, and overpriced schools are going to be closed. It's a big shakeup coming, believe the unbelievable or not. And furthermore, the next Dines letter is going to cover the coming age of robotics, including drones. But we recommend well, in terms of gold. That's another topic. I'm not sure interested. Anyway, I'm through with that.
Yeah, well, I was thinking you could print your own car.
I think right now.
I mean, the parts for it, and then you just snap them together.
Yeah, it's just parts of car now. They haven't quite gotten there yet. This industry is brand new, and that's not the strict truth. It is not new, but it's just gotten to the point where the machines are efficient enough and low-priced enough to make them a realistic desktop along with your desktop 2D printer. So they'll make the parts. They're already making some parts at the automobile companies, but putting the whole car together, they're making the dashboard already. I just found that out today. The dashboards are being made on demand, just exactly the way you'd like it. So the competition is going to be brutal. I mean, you'll be able to get exactly the car you want, not just the color of it, but the structure of it, and I mean, who knows where it will end.
The gas pedals will fit you if you're too short or too tall.
Whatever.
Yeah, it is fascinating.
Is that exciting? I mean, to me, this is, I myself am buying these stocks, and as soon as capital comes in, I buy more. This to me is one of the great opportunities I've ever seen.
Yes, I saw one demonstrated on the Noon Hour News just the other day. They bought it for $1,200 at Staples.
Really? I didn't know that. I didn't see that.
Yeah. And, they made some little toy rings, a dinosaur head that works as a coat hanger. But they said, again, your imagination is the only limit.
The only limit, exactly. This is going to restructure manufacturing, which is mind-blowing because, I mean, everyone that manufactures is going to have to be looking over its shoulder.
And I saw one demonstrated too on an industrial basis. You're right about the automotive industry. It was a casing for a transmission, and how they said you put the thing in just as you leave work. You come in the next morning, and there is the entire mold to make your new transmission.
And the efficiency of it. They're laying down one atom at a time, layer on layer. And so the precision is far superior to what we can manufacture now in many cases.
And even the cost of supplying the plastics. I guess with metals, you could just melt those as well.
Oh yeah, some of them are using. I'll be covering this in future Dines letters. Some of these companies are already using other materials. It's right for the moment. Plastic is the most efficient, but they'll be using other things, paper, and also they'll be putting, as I said before, skin. They'll be making human skin. Just lay it, spray them with a nozzle onto a layer and let them multiply.
Wow. So burn victims, I know that's an accident
it's
victims.
It's going to really revolutionize medicine. In an operating room, if they suddenly see another organ that needs replacement, they'll just print one.
Or I was thinking in terms of plastic surgery. You don't like your nose? Print one.
The truth is, I haven't seen anything on that. That's could be. I wouldn't put any limits on this thing.
More with Mr. Jim Dines next on This Week in Money.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. My guest is Mr. Jim Dines. I've always been a science fiction buff, and how much science fiction has become fact nowadays. I'm just waiting for my flying car. I'm still really eager for that.
I don't believe in the fiction part of it. There's been so much has come true. Who would have thought that a wristwatch could have a radio in it, except for Dick Tracy, perhaps.
And a television.
Well, the television's really interesting. One of my favorite book reads of all time is 1984 by George Orwell. And there are so many predictions in there that have come true already. And in it, one of the most prominent things was what he called a telescreen. He wrote the book in 1949. It was at the dawn of the television age, but they called it telescreens in those days, I think in England, perhaps. And there was one in every room so that Big Brother could keep an eye on you. Well, now they've got these wearable eyeglasses with a video on it, and by twitching your eye or blinking in a certain way, you can photograph somebody you're speaking with whom you're speaking, and also videotape them, look them up on the internet, to report them. I won't even talk to anybody wearing one of those things. But now, instead of a telescreen in every room, they're walking around with one on your head. And what a prediction he made on that book. And even if you've read the book, I strongly recommend you go back and reread it. You can get a paperback on Amazon. It's not expensive.
Yeah, I know one time in my life, my pay raise brought my monthly salary up to $19.84. My boss apologized. He says there's nothing behind it, really. So taking a look at precious metals then, especially with the crisis in Syria and Egypt, is this going to get worse, or is it going to spread, or is it containable, or do we just have to wait and see?
No, I think a lot of it is already visible. The gold, of course, is one of my specialty areas, and on a long-term basis, we've been saying since I was original gold bug at $35, as long as they overprint money recklessly, you'll have more money chasing the same ounce of gold, each ounce of gold, which means its price must go up long-term, just by the law of supply and demand. And people tend to go to gold, especially when there is a currency problem or upheaval. Imagine if you were living in the Middle East right now in some of these problem areas, and you don't know which paper currency is going to survive. An ounce of gold is really the best. Gold coin is nothing better than that, or gold stocks, I guess, if you have the right one. And our last buy signal was in September 2001 in the Dines letter, and that was at $288 an ounce, and it was followed by 12 consecutive years of gains, which was a fantastic run, unmatched by any other investment arena. of which I'm aware. And then there was a 20-month lateral action, and we downgraded gold to neutral, and finally sold out on May 7th of this year. And then it plunged hundreds of points lower. After which we looked for a rally, but I wasn't sure whether it would just be a dead bull bounce, a technical rally, or maybe up to the 1650 area, or whether it was the beginning of a whole new resumption of toward my long-term targets, which is much higher, or a resumption, of the bull market that began in 2001. So I'm waiting on that on a very near-term basis. The last Dines letter looked for a market rally and a decline in gold, which I think will be a short-term move. And we're right now where I'm weighing whether or not this is just a recovery, as I said, a dead bull bounce, what I call a dead bull bounce. I don't call it a dead cat bounce because I like cats and we all eat steaks anyway.
Yeah.
So
preferable to cat.
Yeah. So my feeling on gold is I think it's going to edge down here a little bit, and meanwhile, and depending on what happens in in Syria, that area is seething, and it's hard to say how it's going to work out. We covered geopolitically quite a bit in the Dines letter, and we've giving it extended coverage all year because of the impact on travel and the price of oil, personal safety, obviously, investments also, but also the frequent echoes of the 1930s, the goose-stepping North Korean soldiers, echoing of the Nazis, the rebuilding of navies. Japan, India, and the Philippines have just announced aircraft carriers this summer. We're in a deflation as we were in the 1930s, and we've covered quite a few more eerie echoes of the 1930s in the Dines letter. And there's even a resurgence of what I've been calling the coming religious wars, which was in my third book, Mass Psychology, is already here. It's within Islam, especially between the Sunnis and Shiites, and it's just starting. I believe it's going to reverberate for centuries to come. This is very big, very, very big.
Right, and I'm sure, for people who come from the Western world, they're not aware that just like Christianity comes in so many different flavors and brands, it's the same thing when it comes to the Muslim world.
That's right. We had, as recently, look at the troubles in Northern Ireland between Christians and Protestants, and there's nothing more cruel than a civil war, especially within religion. So this thing is nowhere near over yet, and I think it's going to be ugly before it's finished.
Well, the Dalai Lama, when he came to visit Vancouver a few years ago, I was among the privileged few who got to interview him, and he said, "Christians killing Christians, Muslims killing Muslims. This is insanity, folks. We're all the same, flesh and blood. Why can't we just get along?"
Well, why can't we just respect each other? I mean, I think America's really got it right in terms of the Bill of Rights. We all have the right to have our own beliefs. There's something else involved here too. I covered this in my, it's one of my books. I think this one is in. I think it's also in the Mass. It could be in my Gold Bug book, but it shows a vertical series of 10 boxes, and it goes from on top. It goes from no government. That's box number 1. So the bottom one is total government. So on the bottom you have, for example, fascism and communism, which is different from the left and right prism. And in number 1 you have total freedom, the way the internet was when it first began, before it got taxed and everything and regulated. And in between is a gradation. And I think the world is moving southward toward more government control. The amount of government control is really frightening, and this is right out of 1984. And in terms of the body parts and everything, that's like another one of my favorite books. It's by Aldous Huxley called Brave New World, and he also was a visionary who foresaw test tube babies and a working class that was kept down and given drugs to keep them happy, and and so forth. Anyway.
Yeah, the government doesn't give you the drugs. You still have to go out and buy them.
Well, here we have to buy them, but I think according to his prediction, Huxley's prediction, it would. He was a visionary genius. Always pay attention to these guys. He said that it was given as a reward for good behavior, free, and I think that would incentivize it. And I think that would. He called it SOMA, S-O-M-A, and I think that's what's going. The way it's going to wind up, because it's going to be very cheap. After all, marijuana is a weed. And I think they'll eventually make it legal, not only legalized, but give it as a reward for good behavior. I think that's a.
Yeah, I know one of the pot activists here said, "Why should it cost more than a head of cabbage?" It's the same thing. It's just a plant.
Depends on which kind of a head you're talking about.
Yeah, well, just I guess it does depend. So overall, again, Mr. Dines, are you overly, or I should not overly, but at least optimistic then with these new opportunities that a person with half a head on their shoulders could actually do quite well if they pay attention to these new trends?
Well, yeah, I'm bullish. I think there are opportunities here. I think everybody should follow the Dines Letters rules, which the most important of which is never go on margin. And that's because it's a low state, which is what my fifth book is about. And also, never speculate with money you cannot afford to lose. Make sure you take a small percentage of profits on the way up. With these very big bull markets that I tend to find, instead of trying to get out at the top penny, which nobody ever does, maybe there's only 100 shares trade up there. So there are rules in following my work, and anyway, that's really covers it. Yeah, I'm bullish. There's an opportunity here. I think there are plenty of opportunities right now. I think the bank stocks, I've got 3 on my supervised list. I like those for conservative investors. But the real excitement to me right now is the restructuring area of the world.
So all you people who own dollar stores, make sure that you have 3D printers available for your customers at a low cost.
Well, I think they're going to go through a very rapid evolution as the price comes down and they begin to get a market for it. Right now, the public, have some fun. Go ask your broker or your friends what they think about three-dimensional printing and which stocks they recommend. I guarantee it. I can't guarantee it, but I think it's very likely they won't know.
Well, they should if they know what they're doing.
I think so.
And if they pay attention to your newsletter.
Yep.
Because it always has fascinating ideas in it. I know a lot of people think, investment newsletters, how boring, it's a bunch of charts. And yours is a bunch of concepts instead.
Well, thank you very much.
Well, thank you for chatting with us.
Yeah, I would recommend if those who are interested in it, I would take a 1 or 2 year fair trial, and if you just get one good idea out of it, then renew it, and that's it, and then tell your friends about it. But it's at DinesLetter.com is my website.
Very easy to remember. Thanks a lot again for chatting with us.
You're welcome. Good luck to you.
Coming up, John Williams on This Week in Money.
Always consult your investment professional before making any investment decision.
The best of the best. Randy Elvis Frisky and his Las Vegas show band with Cassandra Frisky. September 14th at the Sagebrush Theater. Tickets at Kamloops Live box office. Call 374-LIVE. Details at randyelvisfrisky.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is John Williams, the master of what we call shadow stats. John, welcome to the show.
Thank you for having me, Jim.
Maybe explain to our audience what is a shadow stat.
Well, shadowstats.com is my website where I publish estimates of the federal government's, U.S. government's key economic series based on the methodologies that were in place some decades ago. What I found over time was that what we're getting out of the U.S. statistics increasingly was varying from the common experience. And when you look at it carefully, what's happened is that the manner in which inflation is reported or the gross domestic product is reported has been changed, generally with downside bias is put into the inflation numbers, so you're getting an understatement of inflation, and upside bias in the economic data. And those numbers have certain effects for different people. Probably the most egregious problem here is the inflation number. That was deliberately set up to be understated, actually going back into the 80s, but it wasn't brought forth into the political realm until the early 1990s, when you had Alan Greenspan, for example, stating how the Consumer Price Index, the CPI, which is our broadest measure of inflation, actually overstated inflation. And that if only we had a more accurate number that reflected lower inflation, it would enable the government to reduce its budget deficit. Because with a lower inflation rate, cost of living adjustments on the Social Security payments would be less. And while that would be true, and that is that the Consumer Price Index, as most people view it, is looked at from the standpoint of either a guide as to how their income should be increasing so they can stay ahead of inflation, or at least what a minimal investment return should be to stay ahead of inflation. But when you're looking at it from that standpoint, you want a measure of inflation for maintaining a constant standard of living. You want to at least be able to live as well as you did the year before. If it doesn't measure the cost of maintaining a constant standard of living, it's really not of much value. And if you look at the historical consumer price indices that have been put together over different countries, different decades and centuries, they've always had a fixed basket of goods, which is effectively your constant standard of living. The way it used to be, very simplistically, in the United States, and this is back when the auto unions, for example, started using the CPI to adjust wages. They'd measure, let's say, the cost of a gallon of gasoline, the cost of a loaf of bread, cost of a pound of steak. The next year, they'd take that same basket of goods. However, the price had changed with that basket of goods. That was your rate of inflation of maintaining a constant standard of living, buying those goods. But the U.S. government very simply wanted to change that. They wanted to go from what was a fixed basket of goods to a substitution-based basket of goods, so that you could bring down the cost of living as people switched to hamburger because they couldn't afford steak. Whereas we're seeing with some people now in the United States where they're buying dog or cat food instead of hamburger because they can't afford the hamburger. The effect there was a significant understatement of the way inflation was viewed traditionally. It did have the effect of lowering the expenditures of the U.S. government, and that was the purpose of it. I mean, the government here was trying to reduce its spending by artificially reducing the rate of inflation, and it changed it so much. Had these changes not been made, people in the United States receiving their Social Security payments would be receiving checks that are at least double what they are today. Very, very significant change. The problem for the average guy, even if he's not receiving any benefits from the government, is that if he's relying upon those inflation numbers, he's not staying ahead of the actual inflation rate. And most people don't understand that.
I think my wife does. She does the grocery buying, and she said, our income hasn't changed, but her grocery bill has gone up by, $100 in the past 2 years.
Yeah. Well, you raise a very interesting point there. We've seen manipulations of the U.S. data over time, and there are basically two ways the numbers get manipulated. Occasionally, you'll have a specific change that's made to a certain report for political reasons or financial market reasons, and that's relatively unusual, and that's tough to pick up. More commonly, the manipulations have been through changes in methodologies, and those have been published and they're out there for people to comment upon, but nobody pays too much attention to it. You go back to the time when the first President Bush was up for re-election against, in this case, it was Bill Clinton. The U.S. economy was in a recession, and recessions generally are not good for the incumbent party. We had a senior person at our Commerce Department go to a leading computer company and said, "Look, fellows, we've got to get George reelected here. If you can boost the reporting of your sales of computers to the Bureau of Economic Analysis, which is the agency that reports the GDP, it'll help our reporting of the economy, and it'll help the political situation. Well, that was actually done, and the GDP growth picked up. And the president was talking about how the recession was over, the economy was growing. But for those who were actually remember those times, the response domestically was, the president's out of touch with reality. The economy isn't improving. And the point with your wife, and the general point I'd make, is that the Main Street USA, Main Street Canada, people have a pretty good sense of what's going on. The government's giving them bad numbers. They'll tend to be very critical of them. And I find that few people actually believe the numbers being put out by the U.S. government. So they can try and fool the people. Many people will not buy it. The problem is that people actually get hurt by the bad numbers. And there I have a very serious problem.
Yeah, I remember it was in the 80s where Statistics Canada decided, I think in lockstep with the U.S., to stop reporting fuel and housing costs as part of the inflation index, because the excuse was they're too volatile. And I said, well, if you don't want to, judge the cost of going to work or running a business, which would be your fuel, and if you don't believe that people need a place to live, which is housing, sure, the numbers are accurate, but take away fuel and housing, those are probably two of your top costs every week.
It's not nonsense to do that. At least as I view economic statistics, I look at numbers that reflect common experience that hopefully are useful to people, so that you have a sense of what's happening to the economy. It makes it easier to plan for your own business or where inflation's going. Those inflation numbers have all sorts of effects, including the economic reporting. You take the GDP, for example. As it's reported, it's reported net of inflation. People measuring economic activity want to see what's really happening to the movement of the economy, not to the movement of prices. So they try and back out inflation from the numbers, and presumably what's left over is the economic activity. The methods that they have put forth to understate inflation are twofold. One is moving towards a substitution-based index, and that's ongoing now in the United States. I mean, whatever they did back in the 90s and that is in place today, they're trying to take it a step further, because back in the changes that were made, they couldn't make the CPI a full substitution-based index. But they've had one in the background that they've had as an experimental index, and now they're looking to move that forward as the primary inflation measure for adjusting cost of living adjustments. Again, of course, it has the effect of reducing the reported inflation, and will help in terms of the deficit spending, but it's going to hurt people who are hoping to be receiving some kind of an adjustment that reflects their actual cost of living.
More with John Williams next on This Week in Money.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back to This Week in Money. We're talking to John Williams. We keep hearing numbers. Inflation is only at 1.5% or 2%, so don't expect a pay raise any greater than that.
Yeah.
But what is the real inflation rate?
Well, the real inflation rate's up in the 5 to 10% range, depending upon the measure that you look at, and that makes a big difference. But just 2%, which is what, in terms of the GDP, they also have made quality adjustments to the components of the various inflation measures that can't be measured, at least not directly. Common way of looking at a quality adjustment might be, and the government sends out surveyors who check grocery store shelves, and they might look at, let's say, at a candy bar. It's an 8-ounce candy bar, and it sells at a certain price this month. Next month it sells at the same price. It's in the same size package, but the candy bar is now 6-ounce candy bar instead of an 8-ounce candy bar. I just saw that over the Labor Day weekend here in the United States. I bought what used to be a 20-pound bag of charcoal. Now it's 18 pounds. Of course, the same thing it did was when it was 20 pounds, but now it's 18 pounds. In theory, the Bureau of Labor Statistics adjusts for that, and will mathematically correct it so that you're actually seeing the price inflation that's taking place there. But if you get if you have a new washing machine that has a digital readout instead of a mechanical readout in terms of the time left, the government goes through the effort of calculating the quality improvement in that machine that has changed the digital outlook and will quantify that. And I say this is worth so much, and they knock that off the price of the washing machine. My contention is the average person doesn't care whether he's got a digital or a mechanical readout on the timer. He's wondering how much am I out of pocket for buying a washing machine.
Yes, and we have noticed the shrinking size of things. We bought some instant coffee as a standby. Same price as last year, but the bottle is definitely smaller.
Yeah. Well, that can be measured. But let's take another example, and then I'll show you what because the effect here is that it overstates significantly the economic growth. If you look at gasoline prices, decade or so back, the government mandated a special formulation that would reduce air pollution in the United States. It had the effect of adding 10 cents per gallon to the cost of gasoline, which was a significant amount in those days. The government didn't count that as part of the inflation, though, because it was deemed a quality improvement. And I can tell you, as one guy who was doing it, I wasn't standing there filling my gas, the gas in my car, saying, "Oh boy, I'm spending an extra 10 cents per gallon here to get better air." The general reaction was moaning and groaning. I'm paying an extra 10 cents per gallon. It's costing me more to go to work or whatever. That's the real world. These hedonically, that's the term they use, these hedonically modeled, these computer models that they have of trying to take quality measures that cannot be measured directly in the price terms and have no relationship to the real world or the way people look at things, have the effect of significantly lowering the inflation rate. And with the GDP, I figure effectively an average per year of about 2 percentage points. The difference there is that if you look at the GDP as it's officially reported using official inflation numbers, you'll find in the United States that the economy peaked in the fourth quarter of 2007, plummeted through 2008 into 2009, hit a bottom in 2009, and then just basically moved higher. Second quarter of 2011, it broke above the level it was its peak before the recession, and it's now about 5% above that. So you've had a full recovery and beyond, according to the GDP. The problem is there's no other major economic series in the United States that shows the same pattern. And that's a physical impossibility if those numbers are accurate. The GDP relies on those other series. The difference is how the inflation is calculated here, and the understatement of inflation has created the illusion in the GDP statistics of a recovery. If you take out that 2% per year of the understatement of inflation, what you'll find is that the economy started slowly turning down 2006, 2007, which you had with the housing industry. And that went into 2008 as the financial crisis developed from the problem in the housing industry. That exacerbated the downturn. The economy collapsed into the middle of 2009. But instead of recovering, basically the economy's been bottom bouncing ever since. It's still not recovering. A good reason it's not recovering, and it's a good reason it's not going to recover in the near future. But I'll contend that common experience for most people and most businesses has been that they haven't seen an economic recovery. It's all hype. It's all illusion. The reason you don't have the recovery, it's basic. You look at the consumer. The consumer income is not growing net of inflation. And if it's not growing net of inflation, you can't have growth in consumption net of inflation, the way they have it in the GDP. Income drives consumption. And there's an exception to that. You can sometimes buy future consumption through debt expansion. So people take on more debt. They buy the stuff to keep up with their standard of living, and that keeps the economic growth rolling along. And that's something that Greenspan has encouraged over the last couple of decades. But with the credit collapse, the consumer doesn't have the ability to borrow money the way he or she used to. Can't keep up with the differential. And without the income growth and without the offsetting growth in consumption, in debt, there's no way that the consumption can be sustained. There's no way that an economic recovery could have been sustained since the middle of 2009 or sustainable in the near future. There has to be improvement in the consumer's liquidity.
And I think there has to be an improvement in the way governments report these very important statistics, because right now, I think it was Churchill who said there are lies, damn lies, and statistics, and these are turning out to be damn lies.
Yes, they are.
So how do we plan for a healthy economy if we're not getting good numbers?
Well, let me put it this way: we're not going to see an accurate reporting on the economy until the reporting system is changed, and you'll know whether or not we're seeing a real economy. People are happy. They're talking about growing sales, and they're hiring people. The basic series that are not tied to inflation, such as employment, the housing units, all show the same pattern: plunge and stagnation.
I took a look at your website, and one of the last stories reported on shadowstats.com was that the actual U.S. jobless rate is not 7.4%. It's like 3 times higher than that.
It is, and but that's a matter of definition. The way the U.S. government defines it, the headline unemployment, which is running at 7.4%, reflects people who are out of work, want a job, they're ready to take a job, and they've been actively looking for a job in the last 4 weeks. Now, that's not like in the European Union, where actively looking for a job includes reading help wanted advertisements. You actually have to go out and be physically pounding the pavement or calling people on the telephone, writing letters. If you haven't done that in the last 4 weeks, then if you still are unemployed and you'll take a job, they'll count you as a discouraged worker. But the U.S. government only does that for a year, unlike Canada, which counts it the same way that the U.S. did back before they changed the methodologies in 1994. The U.S., you're only counted as a discouraged worker for a year. After that, you're dropped from the rolls. They don't track you as unemployed. And the difference is, given the severity and the depth, given the protraction of this downturn, that you've had an extraordinary number of people who, by the government's definition, have become discouraged workers. So they move out of the headline labor force, and as they move out of the headline labor force, it helps reduce the headline unemployment rate in the United States. The United States has 6 levels of unemployment. Their third level, U3, is the headline number that's 7.4%. The only reason that's come down is that more and more people have given up actively looking for work and are now being counted as discouraged workers. But after they've been discouraged a year, they drop out of the broadest measure that the U.S. has, which is their U6 measure. I estimate the full discouraged worker base. It's my estimate, not the government's. The government doesn't track that anymore. I have a variety of factors I work in estimating it. But it shows, if you look at it my way, and I'll contend the number I have is about what you'd get if you went around the country and asked everyone whether or not he or she was unemployed. Average person can give you a straight answer on that very quickly. They have a very strong opinion as to whether or not they're employed or not. And I have it up around 23%.
That's like Europe.
Yeah, well, guess what? Well, you get different reporting in different areas of the world, and sometimes it's certain readings are more consistent than others with each other. But people here will look at the Great Depression and say, oh, in the Great Depression, supposedly the unemployment rate hit 25%. Well, that's an estimate. They did not measure unemployment back then as they do today. Put together from a number of factors, but it would be along the lines of what I'm looking at, except back in 1933, which is when they had an annual rate perhaps of 25%. You had something like 27% of the U.S. population living and working on farms. Today, that's less than 2%. And if you look at the non-farm unemployment rate, which I think to be a little more comparable with today's unemployment rate, at least the way I'm estimating it, the Great Depression level is about 35%. So what we're seeing now is as bad as it's been since the Great Depression, but it's not as bad as it was in the Great Depression. We haven't had any real improvement in the unemployment rate in the broad measure, and that is solely because of the way the U.S. government handles the discouraged workers.
Plus, there's more social services for people who don't have employment. You have food stamps in the U.S. You don't have soup kitchen lineups, which again made people back in the 30s very visible when they didn't have work.
Right. That's a good point.
Well, thank you very much for talking to us, John.
A great pleasure. Thank you again for having me.
Thanks to our guests, Mr. Jim Dines and John Williams, and thank you for listening. I'm Jim Goddard for Phil Mackesy. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.